Hello, thank you everyone for attending. My name is Xavier Rolis, and I'm one of the founding members of the AHPCRE, that is the Association of Hispanic Professionals in Commercial Real Estate. And we are really glad to have you here. If you're joining us for the first time, these events are meant to contribute valuable insights to the CRE professional community and highlight the achievements of Hispanic professionals in the industry. A little bit about AHPCRE. Our mission is that we are a national network of accomplished Hispanic and allied commercial real estate professionals spanning the field of investment, finance, brokerage, law, construction, architecture, corporate real estate, and with direct oversight of projects and transactions. While it's not necessarily code to our involvement or to members, typically our members are working with projects or assets at $100 million or above. And it's no exception for our presenters here today. I'm happy to begin actually in the interest of time. I'm going to be introducing our moderator, Beto. You can always ask more about AHPCRE. We'll have the information posted at the end as well. But a great group of accomplished professionals. And so with no more hesitation, I'd like to just introduce Beto Antuñano. He is the Executive Managing Director for Newmark Title Services, and his office is here in New York City. If you know, if you don't know Beto, I would be surprised. In fact, it's hard to introduce him. I've not had an opportunity yet I can think of where I can introduce him to somebody who hasn't met him first. He's a tireless networker. He's a top producer 3 years nationally for Newmark Title Services, closing over 500 deals annually. Not only that, but he is a consummate deal maker, and he also creates opportunities not just for himself, but for others. Coming from, or born in Lima, Peru, growing up in north of Boston, here in New York City, now and living in Williamsburg with his wife, Alyssa. Just a few things just a couple deals I'd like to highlight for Beto to give you a sense of what he's been able to do. These are 4 recent transactions that he supported through his role. And knowing him, these probably all came in the same month. So happy to have you here. Beto, I'd like to turn the meeting over to you to introduce our other speakers.
Excellent. Xavier, thank you so much for having me. I really appreciate it. Always a fun opportunity for me to get in front of any crowd and speak. So it's always fun for me. Thank you. Yeah, and I appreciate you pointing out some of these highlights. And the reason we were able to get these deals, just a little brief plug for Newmark Title Services and what we do. Newmark Title Services and what we do. We're a high-end residential and commercial title insurance company, right? Handling deals nationally. And that means everywhere in the country. I say nationally, and people ask me, can you close something in Montauk? And I'm like, that's still national, right? So Texas to California to Seattle, Florida, New York, et cetera, so on. There's no asset class that we are not familiar with. We've done $100 million, $200 million deals, portfolios in different states, land opportunities, construction loans, office buildings, et cetera. We would love an opportunity to connect with any one of your clients who are investors and developers looking to sell property or buy property, even though in most of the country, the seller chooses title insurance. And we would be happy to give them some insight before they even list their property or before they ever go into contract. So before you ever get too deep in a deal, we're happy to do a full title commitment, offer complimentary searches, and provide them some closing figures so they know what they're about to be getting themselves into. So that is what we do best. We are a top 10 agent for First American, Fidelity, Chicago, Stewart, Old Republic, and a few others. So would love an opportunity to connect and close some deals together sometimes. But I am not the most important person here today. I think there's some people that are way cooler than I am. So I'm very excited to introduce our speakers today. So we'll start off here with Peter Carillo, who's the principal of HKS Real Estate Advisors. So Peter, thank you for being with us here today. And just to point out a few of Peter's recent successes, I mean, he's successfully negotiated nearly $3 billion in real estate transactions, which is tremendous. So that is awesome, Peter. Looking forward to hearing more about that. And 2 99-year ground leases in Times Square, and a recent portfolio consisting of 48 buildings, 1,141 units, and 58 commercial spaces. So Peter, thank you so much for joining us. And why don't you tell us a little bit about these deals yourself and your company?
Thank you very much for having me. Well, HKS is real estate. It's a full real estate brokerage firm located in New York City. One office, 25 people. We have done all kinds of transactions from multifamilies, portfolios, retail condos, development sites. That is an investment sales side. As you said, and you pointed out, I've done about $3 billion in sales over 20 years. It wasn't that easy. The other side of our company is capital markets, which is done by my partners, who has been doing this for over 15 years. And then over that period of time, they have closed over $27 billion in transactions. We also have a private lending division. And just like you, Berto, the capital markets division works throughout the whole United States. So we have deals in Seattle, Miami. Right now they're handling something, an industrial site for about $40 million, and they're trying to put some good financing on it.
Excellent. That is fantastic. Well, Peter, always great to hear about your successes, and definitely look forward to hearing a little bit more about your insight and how you and HKS are handling some of these recent times here. And let's go on to our next speaker. I'd like to introduce Maria Fernandez-Barragan. There's two R's. I have to roll the R, Maria.
My husband would be very pleased. Thank you for that.
Of course. She is a real estate advisory services for Avison Young. And some of Maria's recent successes, I know that you've represented Chelsea Eye Ophthalmology, as well as Dynamic Broadway Corp, Extra Jumbo Supermarket, the Blow Dry Bar, MetFresh, AO Bowl, and so on and so on. This is a tremendous list of clients, and it's great to see that you are, that you're crushing it out there. So Maria, thank you so much for joining us. And just like Peter, why don't you tell us a little bit about yourself? And I see you have a brief presentation here about Avison Young and what you have going on.
Sure. Beto, first and foremost, thank you so much for that beautiful intro. Xavier, thanks so much for setting this up. Hi, I'm Maria Fernandez-Barragan, or Barragan, how Beto put it, working in retail advisory services at Avison Young, New York City's office, with an expertise in retail leasing for both landlord and tenant representation. So Avison Young is a Canadian full-service commercial real estate firm with a global presence, having now over 100 offices in 15 countries and over 5,000 real estate professionals. One of the reasons I love working at Avison Young, which I believe distinguishes the company from other multinational full-service firms, we're a privately held company that's principally led and has a true collaborative approach to deal making. Rather than having a bunch of teams in a particular department, we're encouraged to work together in order to provide the best service for our clients. We also take a cross-collaborative approach through the different service lines. For instance, we've just been retained by Toll Brothers to sell or lease 2 retail condos at the base of their brand new ultra luxurious residential building at 77 Charlton Street in Hudson Square. So that's investment sales and our retail leasing department working together. I also have the pleasure of partnering and collaborating with incredibly prolific brokers in our industry from other departments, for instance, James Nelson, Todd Corin, Michael Gottlieb, Marty Cottingham, Nikki Harriet. And also, I'm even working on an assignment with the legend himself, Arthur Moranti. You briefly, you actually put up a slide of some of the transactions that we've worked on. And the one that sticks out to me that I find particularly relevant to these times is Aura Cocina, and they're located in East Williamsburg. So these guys ended up having to open during the pandemic. Okay, which just thinking about it, I just get the heebie-jeebies. But you know what? Because we were able to negotiate an attractive rent per square foot, and the landlord, Hudson Properties, was able to compromise in providing the tenant with more outdoor space, in the height of the pandemic, guess what? The tenant was able to flourish and prosper in this market, and they're now ready to expand. We're actually pretty close to going to lease on a space in Williamsburg.
Very nice. Well, thank you for continuing to build the Brooklyn area, especially East Williamsburg, because I live close to the property value to go up. So excellent, excellent. And of course, last but definitely not least is Alejandro Alvarez, a senior associate at Cushman Wakefield. Alejandro, thank you for joining us. And just to point out a few of his recent successes, he won a 2 million square foot portfolio contract for renewing a global nonprofit based here in New York City. That is a tremendous deal. We were talking about it right before this, and I guess it happened during COVID. So that's one fantastic way to save your year during some down times for commercial leasing. He's also worked on behalf of companies like JustWorks, MongoDB, Malka, Media, Room, and also what is this? Named top 30 under 30 for leasing and sales professionals by the Commercial Observer, and top 40 under 40 by the Negocios Now publication. That's tremendous, Alejandro. I'm glad to hear you're doing so well, and thank you so much for joining us. Like everyone else, why don't you tell us a little bit about yourself and how things are going at Cushman & Wakefield?
Absolutely. Thanks for the intro. Thank you, obviously, Beto, for leading this, and Xavier for organizing. Thank you to everybody that's on the call, listening to us and taking time out of their day to hear from various people across 3 different service lines. So obviously, Cushman & Wakefield, I'm sure everybody on the call knows who we are, one of the largest real estate companies in the world. I'm focused on the brokerage side here at Cushman in New York City. My team does exclusively tenant rep work. And a lot of what our focus is and continues to be is helping advise high growth companies in scaling operations here in New York, but also across the country and globally. Right. So the list that you're looking at now is really kind of a short list of clients that my team and I have represented and that we've been able to work with over the past, for my senior partners that have been in the business 25, 28 years. Some of these go way back. Since I've been with them, 5 years and 7 years at Cushman, I've been able to touch a lot of these opportunities. And you can see companies as small as 15 people that just raised their Series A round or just raised some seed funding. We help them strategize how they need to operate in a WeWork or how they need to really get flexibility. And companies as large as, JustWorks or Ipsos that have, thousands of employees across the country. So, one of the great things about being in the team that I'm on and at Cushman & Wakefield is that we have a huge platform to help us execute. And, I'm looking forward to seeing more and more for realistically Latinos in the industry as well, right? One thing I do want to point to and kind of speak about, because obviously this is a Latino group that we're speaking to and about, is that Cushman & Wakefield has done a great job over the past few years, especially over the last year and a half, in trying to lead the conversation about diversity and inclusion, right? We recently hired a chief diversity officer. She's building out her team. And the idea is really it's really to increase not only diversity, but also elevating current diverse talent. So hopeful to be part of that group as we continue to grow. And, we have a great growing employee resource group. And, it's exciting to be here. And I could keep talking for another 20 minutes. I'll stop myself.
We'll definitely get back to you, and we have some great topics. That was great. Alejandro, thank you so much. And yes, I love that you guys are working on not just diversifying Cushman & Wakefield, but elevating those people as well. That's equally as important. So great to hear. So listen, guys, without further ado, why don't we get into the questions here? I guess obviously the highlights, right? What we're all here to talk about, the current state of the market, and we'll start with Peter here. So Peter, we got you, right? You're still there?
I'm here.
All right, making sure the connection's good. I like it. So Peter, so what do you see here? What are some of the challenges that mixed-use building owners you think are facing today?
Well, there's several things that they're facing today. The pandemic has shown a lot of the weakness in the system, and that have created problems with collections, problems with the value of the properties, what to do with empty units, the improvements. the law that changed, the rent stabilization law that changed in June 14, 2019, kind of diminish all the values into the properties, and the pandemic made it even worse. So in today's scenario, they need to figure it out what to do with an empty unit when the tenant moves out, when they were paying $1,500 a month, and they need a repair of $70,000. They have to make a decision whether they're going to increase the rent $94, so it's going to be $1,594, or they leave it empty. But when you have a bank asking for a mortgage payment, you have something to think about it, and it's difficult. It's going to be a tough road for a lot of small owners, somewhere between 3 to 12 buildings. The bigger landlords, the Durs, the Renatos, all those guys, they can weather the storm. They have two different types of assets that allow you to put rent on hold in one side while collecting money in others. But the fabric of New York City is hurt, and it's going to need a lot of things to bring it back.
Yeah, I agree. I think it's definitely going to be tough for some of the smaller building owners, especially with the commercial spaces being vacant, and they don't have deep enough pockets like some of the larger companies that you mentioned. So, but New York City always bounces back. So let's see what happens in the next 12 months here, or at least until the end of 2021. And speaking of how I guess the pandemic has affected different classes, what do you think is up next for hotels and office buildings?
Those two segments of the market, they're going to have to reinvent themselves, right? I think the Times Square area, the areas where tourists goes, they're going to bounce faster than the other areas like Wall Street, right? A lot of the tourists that we get to New York, they only focus on the business part. They like to be downtown in certain parts. That's not going to happen that quickly. I think the tourist areas, they say Midtown, will be the ones who get the benefits. And at the same time, you have to think about it, during the pandemic, all these hotel owners, in order to pay the mortgages and get the business going, they have to take a lot of the make the hotels into shelters. In addition to that, the new regulation that is trying to change that if you're going to put a hotel, you're going to need to use a union. That all those things are going to come into play, which makes it the hospitality business very difficult. For us in the investment sales department, it's sort of like finding a solution. If it's a union hotel, it's going to go for about $250,000 a key. If it's a non-union, which becomes the hot asset because you don't want to deal with the union, it's going to be over $400,000 a key. And there's not many of those that are going to come into the market, which is going to create a frenzy, and the price is going to go up. So it's one of those things that you got to put into consideration. And in terms of office is going to have to reinvent themselves as well. New ventilation system, new flexible leases. I mean, Alejandro can talk about that better than me on that, because the usual 5 year, 10 years, 15-year lease is not playing anymore. At least not what I'm seeing, what I'm hearing from my clients. They want to have a 2, 3, and the banks are going to have to adjust it. There's a reason why Vornado stock went down and Related went up, right? They're both big companies, but Vornado hold the older buildings and Related hold the newer buildings. Yeah. So if you see the difference in those, Vornado has more money to put into the building in order to compete now.
Yeah. Yeah, well, I agree with all that. And definitely, since they have to reinvent themselves and they're having a difficult time, well, these two asset classes are having a difficult time, I would say, surviving and adjusting. What I've seen, at least, and I'm sure it's been the same for you, the industrial market has been exploding lately, all throughout the country. So would industrial buildings, do you think, continue to be the hottest asset with the other two declining, or do you think that's also a bubble and it might change?
Industrial has been the belle of the ball. Talking to a lot of clients who own industrial buildings. These are gentlemen, they are 60, 70 years old. So they've been in the business for 40, 50 years. and then never seen these numbers. Reason why they're selling today, right? Do you imagine that an industrial building will sell for $800 a foot in the Bronx? Impossible. You can't even think about that. But now they're doing it, right?
Yeah.
So it's a question whether you believe in retail and how they're going to reinvent, or you believe in e-market and you're going to control everything on that. For that, we have Maria. She's going to give us, I'm sure, a lot of information on that, on the retail. But it's a question of how you're going to, which one you're betting on. Today, you'll see retail spaces going for under $1,000 when you couldn't see that, never, right? And that's my point. When you're buying retail in Midtown Manhattan or somewhere in the city for under $1,000, and then you're buying industrial buildings in Maspeth or the Bronx or Staten Island for $700-800, it makes you think about it. It's going to be a battle. Sit tight. It's going to be a roller coaster. Who's going to win? We don't know. We'll see. It's going to be interesting.
For sure. Yeah, it's definitely going to be interesting. And with so many moving parts changing, like once again, in terms of the asset classes, why do you believe we haven't seen too many distressed assets, right? Because running a title company, I have people call me all the time. What do you see? We're looking to buy this. We're looking to buy distressed assets. And there hasn't been a lot available. So why don't you think they haven't reached the market yet?
I didn't want this question because this is going to show how long I've been doing this. So it's going to throw my age in there because I was in the last recession. Alejandro wasn't there. And Maria wasn't either.
Yeah, we were in elementary school, maybe.
Right.
No,
not that
young, but thank you.
No, so what happens is right now, the formula in the last recession was, kick the can down the road, extend and pretend. That was it. And it worked. The government was bailing out everybody, so it sort of worked. Just to give you a sense of the idea, in 2008, 9, and 10, we did about 60 deals, and only 2 were sold under par. Everything were par and above. For those who doesn't understand what par is the value of the note, the mortgage. So that's what happened then. Today, the government is also sort of like helping everyone, but the one thing that is about to change is the regulators are no longer have to kick the can down the road as of July 1st. So that's going to trigger a lot of things. And you and I are going to talk a lot because what's going to happen is some of these deals, they believe they're going to go into foreclosure, but the courts are going to be so backed up that it's going to take 3 years, even for a how do they call it, concept foreclosure. So it's an amicable situation where you don't have to go through, you don't fight it in court. You just give out the deed, but that process is going to take. I've been told by attorneys and title agencies that it's going to take anywhere between 18 months to 2 years, which defeat the purpose, right? Because if you buy something for an amount of money and you got to sit on it for 2 years until you get the deed, it's a lot of time in between. And here's when you and I can work because I have an idea how to use title on this. So that's probably one of the things that's going to happen, which is going to trigger the next thing, workouts. This is what creative real estate is all about, right? This is where a seasoned broker can bring his connections, the experience, and allocate fresh equity into a troubled asset, figured it out how to help the original sponsor, work out with the bank, and then kind of sort of push the can down the road for another 3-5 years, but with everybody cooperating, the bank, the sponsor, the new equity, and the management. And obviously they need a broker who will make it work.
That's always important, and that's why we have you three here today. And Peter, just so and lastly, just to wrap things up here, how do you believe the banks are responding to the current market conditions across all of these asset classes?
Well, that's a good thing about HKS because we're small firm, but big in reach. So my partner who handles the capital market department sits literally 20 feet away from me, and we constantly meet and talk about these things. And one of the things that we know is that the banks are looking of how are they going to get paid 5 years, 10 years from now, whatever type of paper they issue, right? So in retail, for instance, when the space was leasing for $10,000 a month or $20,000 a month, and they're collecting right now less than 10 grand, they have to adjust that, right? They are looking for ways to work with the sponsor. So the few things that they're doing in order not to create havoc prior to the regulators as of July 1st, because I believe that's going to change on July 1st. They want us to find a ways for the sponsors to get a 6-month mortgage prepayments, 1 year on reserves. They're looking for the right to look into the finances every year. So they're trying to be creative because at the same time, they don't want to lose the business. They can't have all these things in red. The regulators doesn't put pressure yet, but that's going to change. Up until now, it's been sort of like in a friendly way, but they're going to need to figure out how to work it. Banks they have a lot of cash and they need to put it to work. So it's based on record. It's going to be based on relationships. It's going to be based on how the mortgage brokers handle the whole situation. At my company, we're hands-on, we're client-based. We make sure from beginning to end that we hold their hands to make sure the transaction actually happens. And by the way, before we hit the market with any project, acquisition, refinance, we sort of troubleshoot it, right? To make sure how the bank is going to look into it and what are the red flags. So when we go and present it to our sources, it's sort of like an easy transaction. We already identify who we're going to get it. We usually try to show up at closing, if it's a 30 days, we show up 20 days with the amount that we say.
Well, that's excellent. Peter, I love that approach. And hey, just throwing this out there, if you're doing due diligence before a deal hits the market, you know who to call. It's a fantastic approach. And thank you so much, Peter, for giving us some of your insight into how the market is right now. So
thank you.
Just to throw it out there again, of course, if anyone's looking for investment sales, permanent financing, constructions, et cetera, throughout the country, Peter is a fantastic contact. And of course, as we mentioned before, the principal at HKS Real Estate Advisors. So let's move on to our next featured guest speaker here. So Maria, thank you again for being with us here. I know that you've been sitting patiently for a few minutes, so let's shake things up and we'll get started with you here. So Maria, what advice, right, can you provide to landlords and tenants that can be used as an antidote during times of uncertainty?
You know what? It sounds cliche, but I would say communication. Look, at the end of the day, communication is what sets the foundation for trust in any type of relationship, business or personal. So landlords and tenants that can see their contractual relationship as a real partnership will be able to, weather the storm, as opposed to some sort of adversarial game of Monopoly. They'll do just fine. There's definitely tenants in the market. Obviously, it depends when they bought the building as well, but they'll be okay.
All right. Well, I like that. Thank you. Communication, I think, is important in any relationship that you're in.
Yeah.
So I definitely agree with that statement, right? And
Sure.
expectations. And also, so Maria, in your experience, right, during COVID and rent relief for restaurants, what have you seen, or any portion of the amount of rent owed either deferred or forgiven altogether?
Yes. So during the height of the pandemic, for sure. So some tenants were actually able to get up to 50% of rents just written off. And then also tenants having several months of their rent deferred to be paid towards the middle or tail end of the lease. And then some leases were extended another year since 2020 was a wash, no pun intended.
Yes. I wish my landlord let me do that, but I was not so lucky. I tried to do it with my mortgage, but that also backfired because I had to buy another property. So it wasn't a bad thing. And then about the moratorium, right? Do you think that Governor Cuomo is going to extend this once again? or how do you think this has affected landlords throughout New York City?
Look, I sure hope he doesn't. Landlords are hurting, but I don't think so. I don't think it'll get past August 31st. The city is opening back up, and many restaurants and lounges have been operating at 100% capacity since May 19th. Actually, I'm not going to mention any of the lounges that I frequented on May 19th, but one of them in specific, they were packed like COVID who. So people want to get out there. They have, been rolling out these vaccines. I think that they've done an incredible job in New York City. So look, the moratorium has been a nightmare. Landlords have had to give up control and be at the mercy of government. Like, that's a scary thing. Okay. And there's so many tenants out there, national and local, that took this crisis and completely milked the system. I mean, look, those PPP loans and all of that aid, it's great, but there's a loophole that I think that is causing even more problems. So I'm just glad that we're almost out of this mess, and I'm really curious to find out how this mayoral election is going to go. It's going to be a really important one for New York City.
Oh yes, for sure. I think there's going to be a shakeup in that seat for sure, and I agree on the moratorium. I mean, everything's opening back up. Once New York's at 70% vaccination rate, we're going to be 100% open everywhere, and we think we're only 1% away. And let's be honest, I think a lot of the frequent watering holes that we visit have been open 100% for a lot longer than May 19th.
No comment.
Yeah, I wasn't there. It wasn't me. And in regards to the other side, right? We were talking about hospitality and bars, but what about retail, right? There's still a lot of boards up in front of windows, but what are you seeing? Do you think retail is dead, and will it make a comeback?
Okay, so first and foremost, retail will never die. Okay, if retail is dead, why is Amazon doing a rollout of their Amazon Fresh grocery stores throughout the US when they already own Whole Foods? Think about it. Sorry to say, but whoever's claiming that retail is dead might be living under a rock, and it's clearly not seeing the opportunity here. Look, there's so much financing and investor money out there. It's unbelievable. It's nothing like what happened in the Great Recession. There are so many incentives out there, and it really is an excellent time for a cool retail concept to expand and just take advantage of the market. I'm seeing a lot of local guys that maybe couldn't afford to necessarily be on Madison Avenue. Well, guess what? Now they can. So it's an interesting time. And look, retailers that were slow to incorporate technology, like something as basic as omnichannel, they've suffered tremendously. And a lot of them, they've even unfortunately gone out of business. But the innovative concepts that are able to negotiate a favorable rent per square foot and that have that understanding of what consumers want, they'll stand the test of time, because people want to go out, they're tired of being locked up, they're ready to mingle and socialize. And either way, look, the major correction in retail real estate, that was already set to happen pre-COVID. Yeah. I mean, it was a depressed market. And what's going on now, this has just been exacerbated by the pandemic. Look, let's go back to 2014, 2015 in Soho. Who on earth was underwriting retail in Soho at $1,000 a foot, right? It doesn't take a genius to figure out that those numbers, they just don't really make sense, okay? And look, I actually had a slide that Rebney put together. And if we wanna, Xavier's gonna pull it up.
There you go.
Xavier, there we go. Thanks, Xavier. So yeah, look at that. The highest was actually 1,400 a foot.
Oh my God.
on Broadway between Houston and Broome. And guess what? The lowest now, 186 a foot.
Wow.
Okay, those were getting done like around 200, 250. I'm sorry to the Soho landlords, they're gonna kill me. But I mean, something wasn't right. But anyway, moving along here,
Yeah.
it is what it is. And the retailers that have a true understanding of what their margins are and what they can pay, and they'll be fine. They'll be fine.
Yeah, I absolutely agree. Retail is such an interesting aspect. People, as much as online shopping has exploded, there's always a revert back. People want to feel things, they want to touch things, and especially after COVID, they want to be outside buying stuff again.
Exactly, and your brand will get lost if it's just on the internet.
Yeah.
It's just the formula has changed.
Yeah, absolutely.
And there needs to be more people on the street, especially in Midtown.
So Maria, so we've discussed retail a little bit. Now, what about restaurants, right? Why do you think so many restaurants closed during the pandemic?
So look, the pandemic brought issues up to the surface that were already there, as previously mentioned. For instance, the formula for success for a restaurant completely changed. This was pre-COVID. What really shook the restaurant industry, when I talk to my clients, is the increase in minimum wage. So you're having to pay a dishwasher $15 an hour, right? Well, guess what? Now the person behind the grill, they want 17 or 20. Actually, my client was like, well, I pay my guy $22 an hour. And then on top of that, there are people right now that, because of all of this government aid and unemployment, they don't even want to work. They're enjoying, their benefits and doing whatever they want. So hopefully that changes. But yeah, a lot of these restaurateurs, they didn't get in the industry to have to pay all of these numbers. It just starts adding up and cuts into your profits, and then you're having to pay a really large rent, and you're finding yourself working for the landlord, and that's not really why they got into the industry to begin with. So I think that it's all about just knowing what you can pay per square foot.
Yeah, absolutely. And you're right. A lot of people, a lot of restaurant owners that I know have been having trouble reopening because people are still getting unemployment. They don't want to go back.
They don't want to work, man. They don't want to work. Sorry, guys. Get back to work, man.
Oh, man. See, this is why we need more Latinos, our work ethic.
Seriously.
Oh, man. And lastly, Maria, so what type of retail tenants and businesses do you think are Amazon proof in this environment? And where do you see the future of retail in New York City going?
So great question. I mean, retail has gotten so much more expansive. And people will always need services and amenities. So nail salons, hair salons, medical facilities, like dental offices, med spas that offer Botox and fillers. Like, everybody wants to stay young and beautiful. Beauty and health will never get old, seriously. Another hot concept, micro distribution centers offering last mile delivery. We're now seeing groceries, delivery companies, alcohol delivery being delivered in 15 minutes. So there's a race between some of these tenants in the market, and we're actually negotiating with some of them. Commissary kitchens are expanding because it's a great time to scale and grow. Ghost kitchens will continue to be relevant for quite some time because of the infrastructure needed to operate them. So I'm sure those companies, they'll want to make sure to amortize those construction costs. Marijuana dispensaries, they're here to stay, and there'll be a major ramp up in that industry. Come next year, when they start issuing those licenses, there's already cannabis cafes and cannabis restaurants operating as speakeasies in New York City. So those entrepreneurs that have been operating in the underbelly and growing their businesses organically, they'll have a head start.
Oh yeah.
Yeah, and I also see blockchain being much more prevalent in the food industry and fashion industry. We're already seeing the demand in California, and Zillennials, they're all about being healthy and mindful about the environment, which is great. And they're the consumers that a lot of these companies, they want to target for the future. So it works out. I think it's a great thing.
Yeah.
But yeah, the cannabis industry, I actually was looking at a slide in Business Insider that Cowan and Company put together.
He's looking for it.
There we go. So by 2030, that's less than 10 years from now, it's that industry is going to be worth 100 billion. Okay. And then if you want to go more local with it, so we're going to see a 42% compound annual growth rate between 2022 and 2025. That's insane.
Mhm.
And we need that. You know, there's a large tax deficit here in New York City. So this is going to help us tremendously. And it's a good time. It's an exciting time to be in retail.
Yeah, absolutely. And yeah, this is a great industry. And I'm shocked to hear that there's an underground market for this, Maria.
I know.
I tried to buy a cannabis.
I was shocked myself.
Yeah, who knew New York had an underground scene? Well, listen, that was fantastic insight, and thank you so much for sharing some information with us. And
my pleasure.
Oh yeah, no, of course, always great speaking with you, and reconnecting, of course, because we actually met many years ago. We were chatting about earlier. So let's move on to our last speaker here, Alejandro. Thank you so much for being patient. I've been in your seat where I am on the panel and last to speak, and you know, it's like you want to jump in and you're itching to get going. So I appreciate your patience, and let's start off with I guess how you think the commercial office real estate market was in 2020.
Yeah, I mean, I think that's certainly a question that I get at least a few times a day at this point, right? Obviously, you know, it was a big transformative time for commercial real estate, office use in general. Xavier, if you can put up the first slide we had talked about, I can speak to kind of some real metrics in terms of what we're seeing, right? You know, historically, and certainly since 2017, you know, our average quarterly leasing for office space was about 9.7 million square feet. I don't think anybody's surprised to hear that we saw a big fall off after the beginning of, or after the end of Q1 2020. And, you know, we're still about 55% off of pre-COVID leasing activity, you know, from 9.7 to 4.4 million feet. So, you know, there is, we are seeing in the market some pent up demand that's starting to move the needle. But essentially what that means is that, you know, we have a long way to go and to get to pre-COVID levels in terms of rent, in terms of availability, right? Historically, we were probably in the 9.8% vacancy. You know, as of last month, we're up to 17.3%. And in a 406,000 square foot, 406 million square foot market, you know, that translates to roughly 70 million square feet, of which about 21 of it is subleases. But as Peter said earlier, a lot of we call it flight to quality, right? I think we're seeing more and more tenants going to new developments, going to more efficient floor plates, buildings with new systems, better air circulation. So I think that'll continue to be the trend. And as more and more sublease space comes off the market and as more direct space comes off the market, you'll see that quality be the driving force in some of those decisions. So, you know, in terms of positive momentum, right? I mean, I've seen it personally, besides what the numbers say. I definitely saw a huge increase in activity really since January, as, you know, vaccinations were going, you know, speeding up, getting into more and more people's arms. Obviously, that's going to be correlated. But, you know, since last month, we had almost 2 million square feet of new tenants in the market, you know, most of those being under 20,000 square feet. So again, a real sign of activity. You know, I can speak about this for a long time, and really I could probably take up the entire hour. But, you know, another thing that's important to note is that, you know, last year we were probably averaging about 1.1 million square feet of new sublease space coming on the market. And again, a lot of that was really older quality space that people were in reality looking to probably downsize from. But that 1.1 million square feet has gone down to about 360,000 feet over the past 3 months. So again, positive trends. You know, another question, Beto, that I get a lot is, you know, what discounts are we seeing?
Yeah, absolutely.
And, you know, Xavier, if you can go to the next slide. The reality is rents have stayed relatively stable over the last few years, and certainly over the last 12. What we have seen is really landlords responding by increasing their net effective or by decreasing their net effective rent. So a lot of additional free months, a lot of additional tenant improvement dollars for construction. And that's just really a metric of trying to stabilize that base number, especially if there's some, you know, a highly leveraged building. But, you know, with that and with the amount of available space, you know, that's going to translate into some downward pressure for pricing. We just haven't really seen it yet. You know, it is an exciting time, right? For a client and for a group like my team here at Cushman that does exclusively tenant rep work. It's really an opportunity for us to really leverage not only our client base, but our knowledge of the market. And we've gotten some, I mean, sometimes I think incredible deals over the past 6 months. Tenant improvement dollars and free rent that I would have imagined, you know, a year and a half ago. But I think if you're working with a client that's, you know, has a strong balance sheet, landlords will want to get creative to get a deal done, whether it means more free rent, more dollars to build it out. There's certainly a focus on that. Yeah, I mean, I think, go ahead.
I was just saying, it's crazy to see what type of discounts that people have been offering. I mean, even in just like a rental building, giving away like 3 or 4 free months fees and all these different things. So I can't imagine how creative they must be in the retail and office space, where that's the core of your building in a mixed use or office building.
Yeah, and listen, a lot of it is creating leverage, right? I think I mean, obviously I haven't been in the business as long as, you know, some of you guys and a lot of the people I work with, but the amount of leverage that a tenant has in the market right now to negotiate and to really get the best possible deal is unheard of, right? So I think if your company or anybody listening, if there's a company that you think could benefit from just having a conversation about, hey, where can we find value? Where can we save? Where can we improve our space? There's certainly a lot that we can do. And, you know, when we look at, you know, what does the next few years look like? You know, I'll do the next slide a little bit quickly, since I know we're getting short on time, but, you know, essentially we're predicting a bottoming out in pricing by the end of 2022 and things starting to recoup by 2025. You know what that means? Again, I think there's a lot of absorption that needs to happen for us to get to pre-COVID levels, right? When you're thinking about an extra, you know, 8% of vacant space in a 405 million square foot market, you know, it makes a difference. And again, I think the space that's going to come off quicker is quality space that tenants feel comfortable with long term, right? I think flexibility will continue to be super important as we look into the future. No, I think there's opportunities, and as we plan and as we kind of see how different industries react, different companies react in terms of getting back to work, there's a lot that we can do and there's a lot that we can help with.
Yeah, and I love that some of these like large tech companies have decided to come back to New York or lease more space in New York. So that's a good sign for all of us, I would imagine. Yeah. When do you see the NYC office commercial real estate market getting back to pre-COVID levels?
Yeah, I mean, I think, like I was saying, I think what we've really talked through and kind of what our economists and our research people have said is we're going to start seeing a much higher and quicker upward trend in terms of decreasing availability and pricing probably by the end of 2022. From then, it's a few years to get back. But again, quality, right? We're working with some great tenants right now. One's a hedge fund looking into new development, and that market, and we're talking about rents starting at $130, getting to $300 a foot. That market is white hot, right? You look at One Vanderbilt, it's gotten, I think it's about to get 90% leased. A lot of those deals have happened in the past 6 months. If you look at Hudson Yards, that's been a success story is probably the right way to say it, but you're getting big occupiers looking to go to those types of buildings, and that market is white hot. So again, I think activity will continue to pick up. We'll bottom out by the end of 22, and then quality will be a focus in terms of what we'll see.
Oh, I like it, man. And time flies by, so we'll get there before we know it.
Yeah, of course.
New York City life moves quick. And Alejandro, last but not least, so how do you think this whole work from home environment will affect the office use in the future?
Yeah, it's I've heard that question so many times. It's tough to say because industries have reacted differently, right? Some companies have decided to stay remote. Some have decided to come back, also add additional space in other markets where they might want to have hubs for employees. But overall, I think, Cushman and Wakefield really came out as a leader in thought leadership over the past, 15 months, all of 2020. We were putting out valuable insights that were driven and really data-driven, and really looked at what occupiers are doing, not only in the US, but also globally. And we have a proprietary database to really understand workplace sentiment and workplace strategies called Experience Per Square Foot. And pre-COVID, we had about 2.5 million data points. Since March of 2020, that's gone up by an extra 1.7 million data points. And we've asked about 40,000 people kind of what their thoughts are about getting back to the office. And ultimately, what we really found was it's really going to be kind of an ecosystem, right? Balancing office, balancing your home, and balancing third spaces, third offices in other markets, right? I think and a lot of it's going to be driven by how employees want to work, right? I've had clients that are all over the board, right? I have a client that's decided I'm staying remote, especially the younger startup-y companies, like they are able to do that. They're nimble, they're flexible. But we also spoke with a large occupier in Midtown that has over 150,000 feet, and their mindset's a little bit different, right? They want to have flexibility. They want to increase the ability for people to work from home, but instead of downsizing, they actually want to increase their square footage and really create more collaborative open spaces, right? I think the idea is let's make an office a purpose-built environment where people want to come, right? You don't just come to your office, sit at your desk and plug away. The idea is like you're coming, you're meeting with your team, you're doing meaningful work. And I think part of that is, you want more open area where we can sit with your colleagues, where we can speak to, people that you work with every day. So, I don't have a crystal ball, but I do see kind of those trends continuing. Like Peter said, there's an emphasis, especially on the smaller end, under 10, 12,000 feet, to be a little bit shorter term, 2, 5 years, 4-year deals. Landlords have been willing to do that. They've been furnishing space in some instances. So it's interesting. And again, happy to speak to this for another 20 minutes. I know we have only a few left, but if anybody else has questions, I'm always happy to help. There's a ton of data and a lot of anecdotal examples that we can speak to.
Yeah, I agree with you, Alejandro. As nice as it is saving time on my commute, everyone in my office feels the same way. There's nothing like in-person collaboration.
Yeah.
So thank you so much for your answers and your advice and sharing your knowledge and experience. We greatly appreciate it. And Xavier, are we back to you?
Sure. Well, my job here is easy. I just want to thank everyone. I think that was really exceptional, and I have to thank everyone also for being willing to collaborate. As we were preparing for this, noticed that everyone has a different logo here, but but that we've been able to collaborate and work together. I think it's kind of just a statement on what our association is about and how we are about fostering opportunities and forwarding a positive conversation. So thank you all so much, not only for what you've been able to do, on this presentation, but what you do on your, every day as a representation Hispanic community, and also for the excellence you bring to your role. So thank you all so much. I'm going to share quickly the information regarding our association. If you'd like to just get in contact with me for more information. Now, you do not have to be Hispanic to participate. Again, we are happy to have allied professionals working with us, connecting with us, and meeting some of our professionals such as Beto, Alejandro, Maria, and Peter. So again, thank you all so much for our attendees and for giving us your time. We know that's precious as well. And so with that, I would like to say thank you all. Here we are at the close of the hour. Berto, if you'd like to give any last words, fantastically moderated, and really appreciate inviting you to do it. I'm glad I.
Yeah, absolutely, man. I always appreciate you thinking of me. It's always nice to continue promoting and building the Hispanic community here in real estate. So I appreciate your efforts and constantly pushing us to get this done today. And yeah, I wish the best for the association. Let's keep growing. Let's do this again soon. Hopefully there'll be an in-person.
Yeah, I was about to say.
I am right. It's time. Listen, we can do it in Manhattan anywhere or Williamsburg. I am also part owner of a very large, very cool spot out in East Williamsburg. If you guys ever want to swing by Rebel Cafe or the Rose Club, we'd be happy to host you.
Oh, that sounds great. All right, so we'll work on the flyer and we'll get the invites out.
Awesome.
Thank you, everyone, again, and
thank you, everyone.
Pleasure to spend this time with you.
Yeah, Peter, Maria, thank you guys so much.
Thank you.
Thank you so much, guys. Have a beautiful day.
Bye-bye.